quick, for those that are new or who haven't seen this segment before, every Friday, TJ is allowing me to allocate about 500 grand of his overall portfolio by wheeling, cash secured puts, covered calls, etc. And we've done it for basically 2 months now. And so we're going to go through how much money we've made, premium we've got, how much money we haven't given back to the market, and what moves we will make today as well.
So that's total premiums collected, guys. Net premiums collected is 28,975, and we'll verify this on the actual account. But just to give you all a summary, if you will. So 28,975 open P&L on shares owned is down 1,400 on 1,000 shares of PAT. That was my idea. Amit didn't have anything to do with this. Just full disclaimer. I was like, it's down 30%. It can only go up. Well, that wasn't true. So do not try to pick the bottom. You're probably not going to be very successful. So we're a net. Total net is 27,575, but then I took it a step further. Is it farther or further? I don't know. It doesn't matter. So Hood has generated 13,265. Shop 74.45. TSOL is good for 6,000. HIMS was a cash grab that we did. We got 1250. NVDL was the 685, the earnings play, the ETF leverage on NVIDIA. And then Path, we've at least collected 330 in the premium, but down 1,400 on the shares, just full transparency, right?
Right.
So here's the gimmies and the gotchas. The gimmies, it's great. 28,975 or 27,575 if you want to account for the shares that we're down on. But then now this is a game of now what? Because look at the open collateral, man. What's the open collateral at?
0. We don't have anything open collateral? Holy crap. Wait, the 500 grand is like not even being used right now.
Unless you want to account for 13,000 that I paid for Pat. So yeah.
Okay. Wow. So hold on. So basically you're saying
you didn't know this, right? Because you ghosted me on a couple of text messages. I got receipts of it.
Yeah, well, dude, the amount of text I've been the past week. So yes, I definitely ghosted you on a couple of stuff. I probably missed a ton of screenshots.
No, it's because you were talking shit on Twitter that I was making moves with your money. So now this is my time to give back. I'm one of those guys. I'm petty as hell. No, what happened was Robinhood went up so quickly that we were like at 80% profit with 3 weeks left in the contract. We were only into this contract for like 7 or 8 days, so the math said to close. And that was a big portion of the capital.
I remember that. I think I responded to that. Yeah, I told you.
So we locked in the win.
Yeah, we were up 88%. Yeah, that was okay. So while I was in California and Robinhood was mooning, you closed out everything, and we made 27 grand on 500 grand. So how much is that? That's 27 divided by 500. We made 5.4% in about 2 months or 8 weeks, 2.5% per month. That's not bad at all.
Yeah, not bad. But now it is a game of now what? So now just for full transparency, let's go to Hood. And you guys can see, because at the end of the day, this thing's just addition and subtraction, guys. This game is very, very simple if you're willing to show the books. If you're not willing to show the books, well, then you can leave people to, they're just going to always wonder, right? So we started this thing on April the 26th, Amit. We collected 920. So the way you read the scoreboard is if you see sell, that means that we collected money.
Right.
If you see buy, that means that we gave back premium.
Right.
So you're going to add the 920, the 360. We gave back 30. We gave back 132. We collected 940. We collected 295. We collected 1,060. We gave back 300. We sold 1,300. We gave back 280. This is all in premium. We collected 1,080, and then this is when we got jiggy with it. We got 94.20. We gave back 150. We gave back 1,100, and then we gave back 100. So you guys can see that the one that we did a couple of Fridays ago, that's the reason that we're so profitable on Robinhood. Because this has been the best position so far, but the issue now is we don't have anything. We don't own any Robinhood whatsoever. So now it's just like, okay, what do we do with all this buying power, bro? Because this isn't just in the mid 500K problem. Look at all this buying power over here.
And we did the same with Shopify. We made good money on Shopify. We can
Yeah.
go through that one too.
Yes. I mean, this happened, guys, because my thing is I'm not a debater like Amit, but one thing that I do know that is if you give me facts and you give Amit facts, neither one of us is going to be able to argue with results.
Men lie, women lie, numbers don't, right?
That's the reality, right? So here you're going to see that we collected 1260, we gave back 260, so we locked in $1,000. We collected 590, collected 2000, we gave back 215, collected 1040, collected 2040, rolled the position, collected 1220 on it, gave back 80 bucks, gave back 220, rolled the position, gave back 400, or we collected 400, then we gave back 330. So if you do all of that math, it checks out, dude. There's a lot more pluses than minuses.
All right, so let's take 500 grand and let's buy some call options on Nvidia for 200 bucks expiring.
That's what I'm talking about. Let's just
you called me a pussy for the past 6 months or the past 6 weeks. Let's do some non-pussy shit and let's just YOLO. Let's do it.
But I did introduce you to, hey, let's go heavy on Robinhood because I could see the gleam in your eye that there was very, very high conviction.
Correct.
Yeah. So I was like, so why are we pussyfooting around with it? Let's go grab the bag. Because let's do it to where we're just talking. So here's the gimmies and gotchas guys are selling cash secured puts and covered calls. You know, like if you guys have followed my channel, you'll see like these are my rules to wheeling. Pick a stock that you want to own at a stock that you're comfortable owning that. So a cash secured put, do it over and over again, rinse and repeat. When you own the shares, you sell covered calls, pick a strike price that you're comfortable selling these shares at, et cetera, et cetera, et cetera. But here's the thing. If you want to advance, that's Wheelers 101, Amit. I think you might be ready to go to Wheelers 201. It makes a lot more sense to pick a stock that you actually want to own right now. In other words, the setup is already there to where, like, if you didn't know any better, your old self would just be buying shares and hoping for the best. Yes or no?
Correct.
Because we've all done it. I still do it. In my 401k and in long-term investments in my VUL, I'm not looking at share prices. We're just DCAing into the market.
Right.
So the best setups, if you want to make more money, are high conviction stocks that happen to be at prices that you want to own them right here, right now, because now you can sell very aggressive cash secured puts, maximize your premium that way. There really isn't a gotcha if it dips to your level because you wanted to own those shares anyway, and then you can turn around and sell covered calls, and now you're getting a crap load of premium there, but you're also positioned for capital appreciation. So that's the 3 spokes of the wheel, right? The cash secure put premium, the covered call premium, the capital appreciation premium. Wheelers 101 is you're averse to owning shares. Yeah. You consider it a bad thing. And in actuality, you're not a wheeler. You're a cash put seller.
Correct.
You're a cash secured put seller.
Correct.
And that's cool. But your upside is only the premium that you received. We did not participate in any capital appreciation. You guys can call me a liar on the chat. Y'all called me a lot of things. Go ahead and throw liar on there too. And I have encouraged you to try to take ownership of Shopify because I thought that it was a pretty good level.
You have, and I said, no way, Jose. I don't want.
And we could have probably already gotten $5 or $6 on it. I screwed the pooch on Path, but we would have been right, hella right on Shopify.
You're right. You're absolutely
right. And then whenever you were over here trying to give me some bullshit mediocrity trade on the hoods and stuff, I kept trying to inch the bar up a little bit to make the premium worth our while to tie up the cash secured put money, right?
Right.
And that's why the returns started getting supersized, if you will.
Yeah, and I think
gotchas. We're not qualified for any more money right now. Like now we got to go find the next trade. So to me, if you're going to be a cash secured put seller, keep in mind all you have is a real fancy job. Because now you got to go work again. And then I've texted you this thing. Now what? You know what I'm saying? Like this is a game of now what? So what have you learned? What do you like about selling cash secured puts? And do you see how there are some shortfalls there? And there's also the big risk to the downside. Because from a risk profile, guys, there is no difference between owning shares and selling a cash secured put. Yes, you can manage that cash secured put, but whenever you own the shares, you can sell covered calls as well, and that's hedging you to the downside as well. Limiting your upside theoretically on that initial contract without considering the roll. But I would rather own shares if they're in my price point. I like a happy medium. Like, let's say it's 500 grand. I would like if we already owned $100,000-$200,000 worth of shares and we're playing those to the upside via covered calls, protected to the downside a little bit with the premium. And then also cash grabbing over here with cash secured puts, preferably on the same stocks, because then I introduce you to Wheeler's 201 and 301, and that's running the covered strangle on the stock. That's going to be a lot more profitable.
Right. I agree. I think a couple things I took away over the past 6 weeks is, number one, if you're getting introduced to wheeling, which I'm sure a lot of people are right now along with me, you're going to be scared. You're going to be hesitant because you don't want to lose money, right? And that's like a natural fear anyone has. I mean, think about how many Americans don't even invest $1 into the stock market because they think it's so risky. So if you're doing something like this where you put up collateral, you might get assigned. That's always scary. It's a fear that you have to eventually go get over. Now, second thing I learned is if you're going to wheel, you have to understand the macro economy, which is one thing I'm trying to get better at. Because, for example, I was hesitant on like Shopify at that $56, $57 range. But if I understood the macro a little better and I saw CPI and PPI was coming down, etc., and like I can make that hypothetical prediction, maybe I would have been wrong on that. But if I can make a realistic perspective, a thesis, prescribe what could happen. This is why Tom Lee is so famous.
Right.
Then you can make calls before they happen. And you could say, no, Shopify's bottomed. It's down 35%. The macro's not getting that much worse to the point where it'll go to $40. Let's take some damn ownership. Let's qualify for capital appreciation at $52, $56. It's down 30% after earnings. Let's ride this covered call premium and we can have share appreciation. So I think as a wheeler, you've got to understand the macro and the stock you're wheeling to figure out if you can take ownership of shares, and you can't be afraid once they get assigned at the end of the day.
The thing is for whatever reasons, like owning shares for most wheelers, it's considered like a bad thing. Like, oh my God, you're bag holding, you're this and that. So I'm like, so you're telling me that everybody that's riding this roller coaster on the share ownership of these shares, we're in the same boat. The only difference is I got paid a little bit of money to get into this position.
Right.
But we're both in the same position. If it's NVIDIA, if it's Tesla, if it's TSLL, whatever the case may be, if we own those shares and we aren't doing anything, we're all in the same damn boat. Agreed. The only difference is we created a little bit of a cushion. I think we lost Amit. There we are. We created a little bit of a cushion via the cash secured put premium and the covered call premium. But obviously now we have a lot more to manage. Whereas if somebody who's just buy, holding, and hoping the way that we all are in our 401ks and things like that, there's not a whole lot to manage there, right? You're just kind of enjoying the ride. You're going to look up in 10 or 15 years, and more than likely you're going to be pretty happy with their results.
Agreed. Two things in the chat. Mark says, when is the hood data released? It was released on Tuesday. You can go to the market close from Tuesday and check out that release, or just go to my Twitter and scroll down. Number two, guys, we know SoFi is crashing right now. Again, if you're just joining, the Qatar Investment Authority sold 20 million shares of SoFi yesterday. So that's why it's down 5%. For those that are wondering why it's down.
Yeah, I want to see some shitty timing because I'm full transparency on this channel, right?
Let's do it.
I was live on this channel, and then Tevez joined, and this idiot right here, TJ the Wheel Deal. What a fucking tool. Oh, so this is what I did. I had this creative idea, Amit. I had this creative idea to sell 500 cash secured puts yesterday at $650.
Oh boy.
And so fine. I picked up a cool $8,000 and I was like, woo, on the channel, roll the tape, it's there. I was excited when these things got filled. Now ask me how excited am I that it's already in the money, at the money, or slightly in the money 1 day later. You know, like, have you ever seen those memes? A few moments later, right?
Yeah. Well, to be fair, TJ, this is July 12th. I think SoFi is above $6.50 on July 12th.
I do too. So this is why I wanted to go here. I do too. So guess what?
Are you going to put my money into SoFi?
No, this is my money. So I'm like, well, if I liked it at 16 cents in credit, I should be loving it at 32 cents in credit. You follow me?
I mean, that's a cool 16 grand, dude.
So I'm going to tie up another 325 right here, right now.
Okay, so before you do it, can you walk through the logic real quick of why you're doing this for those that are wondering?
Because I'm already long the stock, so a lot of the studying goes out the window. When I say long the stock, I want to be in this stock for the next 3 to 5 to 10 years. So I'm not look out, let me go look the other side, let me go study the chart, let me go, no, dude, I'm just going to go grab premium because I'm totally comfortable owning these shares at 650. My average is 792. 650 is already a lot better anyway.
Right.
This is a long-term play. I want to go grab this premium because if I go grab 30 cents or whatever they're offering me, my break even's like 620. I really think that I can make a strong argument. I'm not like a master debater like you, but I can make a strong argument that SoFi is pretty undervalued at $6.20.
Okay, before you do this, can you go to view all options on SoFi? Can you go to the option chain, basically? Can you go to sell put for January and go to $7?
I have several of these on already.
Oh, yeah, because there's an 18% premium there. Would it make more sense to do that?
Well, I've already got 700 of those.
Oh,
I've
yeah,
got 400 of them at 8.
Damn.
So I'm already quote unquote synthetically long or whatever creative terminology. I don't even know who came up with this shit. I've already got puts that are in the money on purpose because I want to indirectly participate in capital appreciation. So I've already got 700 of those at 7, and I've got 400 of those at 8. So I mean, I'm showing you guys the whole bag here.
Okay, so we can go back to the one you were gonna do, but yeah, 650 by July 12th. I mean, I don't know, dude. I feel like Qatar's out of it.
But that's the thing, Amit, is I don't care if it is or isn't.
Well, yeah,
I'm
that's true.
looking at this premium because I'm okay owning them. And if you want to do stress-free living, selling puts and calls, do it on a stock to where you don't even have to look at the scoreboard. You're not monitoring. In other words, I own this trade. This trade does not own me.
Right.
I don't care if it's below 650. Awesome, I'm gonna own shares. If it's above 650, I just made a pretty healthy premium for agreeing to get into this position.
Right.
So I'm very indifferent either way. And presumably, whenever you're selling a cash secure put or a covered call, you should be okay with whatever outcome. If you're not okay with whatever outcome, you're not selling the right option for you on the right on the right stock for you at the right strike at the right expiration. That is just the reality of the matter, guys.
No, you're right. You're right. 100%.
And there's nobody that can talk me out of this right now. You follow me? And I'm okay bag holding this thing if it happens. Like I push the buttons and I live with my results because I keep doing the homework on SoFi. And at some point, if Galileo delivers, or if they just still stay as a bank, but they keep growing 20% year over year, I'm going to challenge anybody in the chat, go find me another bank growing at those levels. Then maybe SoFi deserves a different multiple at some point. Because at the end of the day, 20% CAGR is 20% CAGR. I don't give a shit if your name is JP Morgan or SoFi at that point. If we want to brand them together as just a bank, because do you think that JP Morgan it's so damn big, it can't possibly grow 20% year over year? Stands to reason that a much smaller bank is able to do so, right? Because they're barely getting their feet.
I think the key takeaway from this is you know what you're doing here. I mean, on the stock that you care about, and no one else can. And that's you got to get to such a level of zen where you don't give a shit.
I really don't. This is like selling a put on Palantir, bro. I don't even look at this shit.
Agreed.
I'm just like, I'm only looking at my premium. That's all I'm looking at right now because I'm long the stock. And if you want to go sell premium on stock that you're long on, you are going to live a very stress-free life doing this thing. But if you just want to go cash grab on GME because Roaring Kitty's doing this thing, and then now you're bag holding, and now you're pissed off, the only person that you have to blame is yourself. Because you broke the main rule, which is don't sell cash secure puts on a stock that you're not okay owning for the next 3 to 5 years, because it might take you 3 to 5 years to manufacture that win.
All right, let's sell it on SoFi, and then I'm going to give you a couple other names.
So let me rock this right here. So you see, man, we've been talking, and it cost me a couple dollars in premium, guys. So 200 is the max that you can do on Robinhood whenever you're collecting more than 25 cents a share, just so you guys know. So I'm going to see if I can get at least 30 cents. Ooh, looks like I can. Maybe get 31. No, that ain't going to happen. Let's just try to rock it out with 30. So tying up 130 grand, they're going to pay me 6. A little under. There it is. So there's that. So if I go here, you guys could see that it was 500 contracts earlier, and now we're at 700. So then my average credit's going to change, right? Because I got 16 on the first batch of 500, and then I got 30 on the second batch at 200. And then you're going to see both of the trades right there. So 8 and 6, I got 14,000 collectively. So while I'm annotating the wheel tracker, Amit, you want to talk them through the ideas that you have for cash grabbing, because we still haven't touched your 500K, and this is what it's about for you.
Yeah. So I'll while you're updating that, I'll talk about a couple names. So what I'm thinking from a cash from a cash put perspective is companies we wouldn't mind being long, but also companies that we think are potentially undervalued right now. I think, guys, believe it or not, Snowflake is a candidate. Now, we have to see the premiums on Snowflake. But the reason I'm saying Snowflake is a candidate is because just from a technical perspective, this thing is oversold, in my opinion. Do I think long-term it is a great investment? No. But if we're writing a put for a month out, owning shares at $115 or $100 on Snowflake with a company doing close to $3 billion in revenue, I mean, that's just not something that I would be scared of owning. And if Snowflake actually is the worst company in the world, which I don't believe that's the case, then all right, we'll take the risk and mess up on that trade. But I think Snowflake is due for a bounce when they have a good earnings. Yes, they've had a lot of issues so far. If the premiums are decent, I think that's one that is reasonable to look at when it comes to Snowflake. Number 2 is Robinhood. Now, it's a green day, so maybe that's not the best day to sell puts on Robinhood. But again, the May metrics to me were substantial. They were phenomenal. I think it's going to keep going up. The only thing I was worried about was crypto volumes edging downwards, but I don't think that's the good thing is Robinhood's, as you can see, Bitcoin fell from 70 to 61. Robinhood's up from 21 to 23 because it is diverged from just being attached to Bitcoin because there's other parts of the business besides crypto. So I think selling puts at like 20 here, 21.5 is not the craziest idea in the world. And then outside of just selling puts, TJ, I'm also thinking of covered calls. I mean, ironically, we were talking about covered calls today. I was looking last night. I made a screener on Robinhood looking at stocks that I think have decent covered calls premiums. And I was looking at a bunch of different names where we might just want to buy 100 of the shares to see what ends up happening and what covered calls we can sell on top of them. One of them I was looking at was Snapchat. Now, Snapchat, not fully well-formed in the fundamentals. Quite frankly, I hate the fundamentals, but it has created a bit of a range since falling from 17 or falling from 30 last year. That's one of the names that doesn't have the worst premiums. Unity, I really don't like Unity, but from a covered call perspective, there's good premium there. And the thing is down 56%. So it's another question of like, how much more can it fall? And another one is Lyft that I was looking at, and Enovix. Enovix I really don't want to do because I think it's too risky. But Lyft is one that is also down 4% year to date that has decent premiums on the covered call side as well.
Awesome. So I actually talked to Tevis about Unity yesterday. He's got a pretty sizable position in Unity. And he said that they just got a new CEO, but fundamentally there's a lot of things wrong with the actual company.
Agreed.
The premiums are decent. I looked at them yesterday. So whenever, instead of like just buying shares outright, the one thing that you could do is you could sell cash secure puts at the money.
Right.
So you're maximizing the premium that you get, but you have a little bit of that protection that way we're not going so rogue, if you will. Because it's very unlikely that we're going to buy something and this is going to start shooting up. I mean, I already proved it with Path and just look at my portfolio. Very seldom does that happen where you're going to buy shares and they're going to start mooning on you. Unless you just get lucky, because that is definitely not a skill set I've mastered. But I have gotten lucky a couple times.
One other idea I want to run by you, and we should pull it up, the chart when you're ready, because I want to look at these, is what if we sell puts on NVIDIA? I mean, the premiums should be high because people think NVIDIA's run too much. If we get a sign, that's one where I'm like,
oh, it's NVIDIA. Yeah.
It's fucking NVIDIA. I mean, like we're either at the top of the cycle and we're dead wrong on this, which is possible, or
I remember you brought it to my attention from the beginning, or it was Palo Alto Networks, similar crazy price points. But it was like, we got to be able to own 500 shares. Well, now we can because of the split, right?
Yeah, so and NVIDIA
has changed the game.
We know what's happening with NVIDIA. Like, at least for the next 2 to 3 quarters, I don't think we see a significant downturn. If anything, I think we see an acceleration just given.
So I have Snowflake pulled up. Let me pull up NVIDIA because let's just go with the highest conviction first.
Yeah.
Of anything in the stock market, we can agree that NVIDIA is probably the highest conviction for everyone right now. I mean, this thing is just on fire, right? So this would be the equivalent of $1,300 a share. Keep that in mind, right? Because there was a 10-to-1 split, and this is where people get lost in the sauce. So at $1,300, we're not going to be like super excited about it if it hadn't split. So at 131, it's just more economical for us because of the amount of money that we're tying up. But the valuation is the exact same on Nvidia at these prices. So what are you thinking? I'm thinking maybe like 120-ish or just like spitballing. What are you thinking?
I want to see the option chain. I think 115 gets more exciting, but yeah, 120, 125s.
Well, keep in mind, we can always roll, right? We can always fix the trade.
Right.
This is just to get in one. You want to go 2 weeks out, or are you thinking a month? What do you think?
Let's do a month. Let's do a month.
Okay, just to get some accurate mode, dude. This is fun.
Look at these premiums, dude. Goodness gracious. Oh my God.
Yeah, but keep in mind though, it's for a month out though. So
yeah, but still, dude, 380 to lock up 126. I mean, or 1260. That's not bad. And real quick, let me read a comment by such.
Delta. This is textbook right here, like 30-31 delta. That's kind of where people play whenever they sell cash secure puts.
Yeah, let me read a comment. Let me just read a comment by Sachin in the chat. Sachin, good friend of the channel. Sachin, happy you're here. He says, top of the cycle is marked by stagnant revenue, reduction in operating leverage, and increase in SG&A. OpenAI, this is a really good point. The information reported has doubled their revenue to $3.4 billion. This may be a bubble, but this is not the bubble's top. I agree. And ChatGPT 5 is not even out yet. Right. And Apple's Siri, which is going to give AI to the hundreds of millions of people, is not even out yet. All of that.
The gentleman that does podcast with you, I feel like I've seen that face on there.
Yeah, Sachin's been on. We got to get him on Palantir Weekly again. He's done Palantir Weekly.
Okay, yeah, he's a super smart guy, dude. I wouldn't want to be on a podcast with him. It makes me feel dumb.
Yeah. Well, Sachin, every people know Sachin from the channel. He does wheeling as well. I mean, he does plenty of wheeling. The other thing about NVIDIA is that Blackwell revenue for their new chip. Jensen said that's happening this year as well. So it's just like, I do.
I don't think there's nothing to talk about. Amit, how many do you want to sell, bro? Like, you don't have to sell me on NVIDIA. Like, I missed this whole boat, and I feel like these guys owe me a couple $100,000. You know what I'm saying? So I want to go get my money. But no, because I mean, my thing is again, I have a 25-25-50 rule. So whenever I feel like it's pretty frothy, so it's 25% of the total capital that I would like to allocate to the position. If it dips, then we would deploy the other 25%. And then if it really dips, then I would deploy the rest, the 50% that's left. So it's like take a pie, right? It's 100, it's 4 pieces, if you will. So right now it's like I'd be willing to devote 25% of total capital allocation for this position and hoping for a dip. Like I want this thing to go down so it gets more attractive for us, right? From a valuation perspective. But if it doesn't, well, I'm happy, grabbing what we can grab right now. 125 is good, dude. I mean, what is the actual?
Can we see 120? Can we see 120?
Yeah, but I don't think it's gonna be juicy enough, dude.
120 is what? 205. So 205 divided by 1200. That's not horrible. Hold on, let me see.
For a whole month though.
205 divided by 1200. That's 1.7. Okay, where's the 122?
Amit, 125, bro. It's NVIDIA, dude. What are you stressed out about? We can always roll this trade if we need to.
That's true. We were at 125 like 2 days ago. So I think it's if we have a little bit of a downturn, we're definitely seeing 125. That's the only reason.
I know, but again, you got to get out of this notion of owning shares is a bad thing. You know that cover calls pay money too if we own these shares, right? Like this is the exercise that I always do. Let's pretend we already own these shares and we were stuck and we were trying to sell these shares. Well, how much money are we getting for agreeing to sell them? Let's say we owned them at 130. Just say we got caught with the hand in the cookie jar right here, and we wanted to agree to sell these at 135. Look at the premium on that, $530. You know,
well, that's a good point. For NVIDIA, people are willing to pay the call premium. So you're right. That's a hell of a point.
I mean, the premiums go both ways. You know what I'm saying? Like, again, I want to graduate you from just being a cash secured put seller and being okay owning these shares. I got an idea for you. Why don't we buy a couple hundred shares of NVIDIA, sell some covered calls, and then strangle it by selling some cash secured puts? And now we're working on lowering our adjusted cost basis on both sides, but we're already qualified for capital appreciation. Because here's the thing. Why would we want to even participate in NVIDIA right now unless we both agree that it still can go up and to the right from here?
That's fair. That's fair. No, you're right. You're right. You're right.
And again, at the end of the day, it's NVIDIA. You know what I'm just saying, dude, like to me, I don't even stress out as much as you guys might think, because in my mind, forget about Neo. Neo's like the total Russian roulette gamble. Forget about that one. But aside from that, I have conviction in all of them. Forget about Pat too. I thought I could pick the bottom. I was wrong. So those two excluded. There's nothing in the portfolio that stresses me out right now. PayPal, I got like a $60 average, and I'm not that stressed out. Palantir, I got like a $14 average. I'm not stressed out. SoFi kind of sucks. It's $7.92, but it is what it is, right? So what do you think? What do you think about buying a couple hundred shares? That way we're like in NVIDIA, because I feel like you're not really in until you own shares. So let's buy. We know it's not the best entry point, but who gives a shit? We're going to get a rebate right now of $5 or $6 or $4. So it's almost like we bought them at 126, 127.
Right.
And then we'll turn around and sell some cash secured puts, and we're trying to lower our adjusted cost basis. That's the game, right? You want to lower the adjusted cost basis to zero eventually, but you're never going to start until you own some shares.
I agree. The only thing I would say is I don't like buying it at 131. I really don't. I'd rather sell the 125 put, but I'm not opposed to just getting into the game. But I don't like buying it.
But we're only talking about also buying 100 or 200 shares. So we're talking about an allocation of $13,000 to $26,000.
Yeah, that's fair.
I'm just, you know what I'm saying? And you're in a different situation. You got $500,000 to work with. So you got to start operating like you have $500,000 to work with. And that's the reason that people with more capital tend to make more money, because they're not scared of money at the poker table.
Right.
Because this isn't your only $13,000.
Right.
You shouldn't be wheeling NVIDIA. That's all that you have. Because then now it's like you have to be right.
Right.
We have to be right. We just want to get in the game. And that's why these institutionals run this game, because they have enough money to manufacture the win if the conviction is there.
Right.
You know, they don't have to be right. They just need to get in the game in order to be right. It's like you don't have to be great to start, but you're going to have to start to be great. You know what I'm saying? It's one of those things. So do you want to buy shares, or do you want to be aggressive with cash and puts? That's what it comes down to.
Let's buy 200. We got to pay $2 extra now. Now it's 132.
Money talking to you, man.
Every time we talk, it just go. We need to be talking forever. This thing just keeps going up.
So let's just go 200. You want to go 300? Can we go 300? This one's on me anyway. It's all good. I want to own NVIDIA.
Yeah, let's do 300. Let's do it.
Yeah. We'll just do market order. Who gives a shit?
All right, 132. We're in.
I'll put that on there. I'll make Bill put it on the spreadsheet to make it legit later. So there's that. So then now what I do immediately is, to protect to the downside, is I sell covered call, because this is called the buy right strategy, if y'all want to use technical terms, because I know y'all are fans of the synthetic longs and all this other silly shit here. I have no idea who comes up with these terms, by the way. But so what I
gotta be some type of financial influencer who makes them popular, you know?
Yeah, it could be. I don't know. I'm not smart enough to do that. I just try to make money. So anyway, you guys can see there that we are probably down on the shares. So now it's like, okay, we want to protect to the downside. So the way that you protect to the downside on a buy right strategy, when it's like, this is like itchy trigger finger type stuff. So the way that you erase that a little bit is we just turn around and sell a covered call immediately. That way we're kind of getting a rebate, if you will. So you want to go 2 weeks out on the covered call limit, or do you want to go 4 weeks out on the covered call? That way we match it up to the cash secured put, and then that officially becomes a covered strangle.
Yeah, let's do 4 weeks out. Yeah.
Okay, so 4 weeks out. So let's see what we can get. We bought them at like 132. Do you want to? Would you agree that 140 is higher than 132?
I think $8 on top of 300 shares is not bad. I agree.
So then we'll go here, and we'll go. It's 3 contracts, right? 3 share. Yeah. So then we'll go, like, you think they'll do it in the middle? 380 maybe? I'm pretty
380. They might do
that. What is the open interest and stuff? I didn't look at any of that shit. See, that's not going to happen.
No, you didn't. You forgot the dot.
Okay, that's not going to happen, no?
Yeah, 380 would be.
That'd be real nice. Can we get 385? So we're getting a rebate of 1150, whatever. Dude, I'm going to fight over peanuts right now. So there it is.
So 1150. We spent how much? We spent 40 grand on the shares.
Yeah. So we're gonna go through the math here in a second.
That's 2.8%. Okay.
Refreshing the scoreboard. So essentially, what we did is we said, "Hey, we're a big fan of what's his name, Jensen Huang. Is that how you say his last name, or did I screw it up?
Jensen Huang.
Whatever. With the leather jacket guy." So we're a big fan of the leather jacket guy. He's got silky smooth gray hair. He's very sophisticated, very well spoken. And he says that he's got a chip that's going to be worth a shitload of money that isn't even out yet. So factor that into the book. So we got excited. We bought into the noise. We bought into the hype. And so we bought at the top at 132. So we were like, okay, we jumped the gun a little bit. So now we want to subtract 385 from the 132 in the form of a rebate for committing to sell these shares at 140 a month from now. So we got 1155 subtracted from the 39,637. So that's going to give us our adjusted cost basis on the total capital outlay,
which is about 128 essentially.
Yeah. So do you feel a little bit better about NVIDIA at 128?
I do. And now we're about to sell some puts to make it even lower.
Yeah. So then now it's like, okay, well, we liked it at 132. It stands to reason that we should be loving it at like 125, right?
Right.
So let's agree to sell some cash secured puts at 125 for the same strike price. That way we're not having to monitor too many expiration dates.
Right.
And you want to stick over here at 125?
Yep. Let's do that.
Because if we liked it at 132, we should be loving it at 125, right? And how many contracts do you want to go now? We bought 300 shares outright, so I'm thinking we could do 7 contracts.
I was literally about to say 7. Yeah, those full 1,000. Yep.
And let's see if we can just get a little bit more money, like fight a little bit, maybe fight for that. Well, it looks like we can do better than that. Maybe like 330, 329. Let's go there. Just trying to get these guys filled.
330. Yeah, they're giving us 330.
Well, we'll see, and they haven't given it to us yet. It looks like we're at the top of the thing right now. So we'll let that stew. And if it doesn't fill, we'll come back and we'll put 320 and we'll get it done. You know what I'm saying? Like, but let's give the market time to do their little Chinese auction over there. What else did you have? You said Snowflake was a contender, correct?
Yes. Let's look at Snowflake. Let's look at that one.
Well, I like that this is going down. So this is way better than NVIDIA just from that perspective alone, because you want to start a position when it's getting hammered because you're going to get better prices. So talk to me a little bit about Snowflake. Is this the company that Warren Buffett was in from the beginning or no?
Dude, yeah, Buffett was in, Wall Street was in. I think it's a stupid company. I mean, like, I think it's a reasonable.
Now, do you say that because of your allegiance to Palantir, or is it really a stupid company objectively?
So objectively, no, it's not stupid because they're doing 2.6 billion in revenue. Non-objectively,
so there's a little Palantirism. But there's like Palantir. Are they kind of in a similar space or what?
Yeah, the reason I'm bringing this up is because I would not want to own Snowflake for the next 10 years. I don't think they have an AI moat. And that's not me. That's the Databricks CEO. Databricks is growing very well, who also said Snowflake is nothing, right? But they're growing. But their growth is deaccelerating. However, 124, I feel like a bounce to 150 is not crazy at all. So owning shares at 115, 120, after it's down 50% the past 5 years, I think another 40% this year. From a technical perspective, I think it's a cash grab. But if we did have to own it, it's not the worst thing. I mean, there's a company that does almost $3 billion a year. You know,
are they a profitable company or no?
So they're not GAAP profitable, but I mean, like, they could flip a switch and they'll become profitable. They're growing their revenues a lot. But the problem is the revenue growth is deaccelerating, which is why it's down, and the market doesn't think there's an AI moat to Snowflake, which I agree with the market. As per the share price, there's not an AI moat.
Right.
I mean, like, if you gave me a gun to my head, I'd rather own 100 more contracts of NVIDIA over Snowflake. But I want to see the premiums to see kind of where we're at.
Okay. Well, keep that in mind. So we could do. Can we do 100 contracts on Snowflake? No, that would be like $1 million, right?
Oh no, I wouldn't want. I would do like 5 max, 10. You know?
Well, we already have 10 technically. So we got Snowflake. You want to stick with the month out? Vince is asking why weeklies, monthlies, etc. It's really a preference. The math checks out that if you do weeklies, you'll make probably an extra 1 to 1.5% annualized. Yeah, so that's a lot of money, but it's also a lot more work. I prefer 30 to 45 days out, and I like to manage these trades 21 days out because I have found. And this is just watching Tasty Works videos or Tasty Trade, whatever they're called. Early on in my wheeling career, that first 50% of your premium is easier to realize than the second 50%.
Correct.
If you're only dealing with the weekly, it's like, man, you really have to be more directionally right on that position because it's so easy to get underwater. Whereas here, it's like I can kind of cruise control, still be directionally wronged a little bit, but for whatever reasons with data decay and everything, I can still find myself up 50%, in the first couple of weeks and not sweating anything.
Right.
And I like collecting the big chunks of premium because people look at percentages and all that, but I also look at big chunks of premium because at the end of the day, what's a realistic adjusted cost basis on NVIDIA for us is I would like for the goal to be to try to get to $100.
Yeah.
Because then it's like, okay, now we have a little wiggle room. Because right now we don't have a margin of safety, dude. We are literally, we're like the dumb people in the market right now, but we're trying
dumb money right now. Yeah.
Yeah. So let's talk about the snowflake, man. So what are you thinking? The same thing? You want to be over here?
Yeah. Let's look at, the premiums suck. Kinda.
Do they have 120? I feel like that's going to be about.
Oh no, 120 is decent. Hold on, 246. That's like 2%. 246. Yeah, 2%.
So 24% annualized.
No, 125 is a lot better. Obviously,
yeah, you're at the money.
You're at the money, right? I thought the premiums would get closer to 3.5%. That's when I was really be like, all right, let's pull the trigger there. 2%. I don't know, dude.
So this, I think, is the third Friday. They tend to be a little bit more elevated. So if you go July the 19th, 35 days out, that pays 330. Is that a little bit better?
That would give us 2.7. Yeah, it's not horrible. I think 5 contracts of that is not crazy. Like $1,500. If we own Snowflake at 120, so we got to be comfortable with we're dead wrong on the thesis on Snowflake and this thing's going below 100.
Yeah, but hasn't Chris, not to piggyback off of other people's research, but I do it all the time. I confess my sins, right? I like using smart people and making money off their brain. That's why I do YouTube. I've learned a lot more from smarter people than I'll ever learn from myself. And I think Chris Patel is very bullish on this company, so he's had to do some homework on it.
Yeah, but just like you said, I have a Palantir bias. Chris has an anti-Palantir bias. I think Chris is wrong on his bull thesis. I've been public about that.
So then why did Warren Buffett like him so much?
Dude,
somebody who's better than all of us combined.
No, Warren Buffett got in at IPO prices. He pumped his, he got in. Just Warren Buffett has not invested in anything technological for the past 50 years outside of Apple. So a big database software SaaS company is just like a throwaway for him. It was just like, he could get in real quick and then get it. It's like it wasn't a real investment at all. I disagree with Chris on the thesis. I think though that it's technically sold off. That's why I think the cash grab here is not crazy. But I disagree with Chris that like Snowflake's the next big data company.
So if we go 10 contracts at 340. What does that look like? We're tying up 120, dude. That's not like the worst thing in the world right there.
It's not. Look,
about 25% a year just eyeballing it.
I think we do it, dude, because I think it's going to be similar to Adobe. Adobe was down 30% a year to date, and then they pumped after a good earnings. I think Snowflake has nowhere to go but up. Like, could it go down? Yeah, but it would really. The market would really have to disrespect them doing almost $3 billion in revenue to say, fuck Snowflake. So I think it's not.
Let's send it and see what happens. There it is. That was quick. That means there's good liquidity there and entry. That did not. We could have probably got an extra penny or two.
Yeah.
Interesting. Okay, cool. So we got 2 plays that I'm really excited about. So now let's go back to NVIDIA. Let's go back to them. And how do you feel now? Because it's one thing to put the play on, and then once you see it on the scoreboard, it kind of makes you feel it a little bit differently.
Did we get filled on NVIDIA? I think we got filled.
Yeah, no, we did.
Okay, so I feel good. I think both stocks, NVIDIA, I love, and Snowflake's oversold. I think they're not horrible plays at all. And if we have to own them, it's not the worst thing in the world.
So here's the thing. Let's talk now. Let's do a little teaching segment, guys, and let's talk about the covered strangle. It's an absolute mathematical certainty that either this cash secured put or covered call is going to be 100% right. It's a mathematical certainty.
Right.
But then you also have a probability that both of them are going to be right. But it's a mathematical certainty that you have to win on one. You can't mathematically lose on both of these at the same time.
So let me do some math. If we're saying NVIDIA is above 125 but below 140, then if it's like 130, for example, we win.
That's the Goldilocks scenario.
So there's $15 we could be at in that spread for us to win and collect the premium, keep our shares, and not have to buy new shares. That's why this is such an interesting strategy, right? Because you give yourself this Goldilocks zone essentially to be in.
Correct. You created a spread, right? If you will. But worst case, or what's bad, this is what could be perceived bad. NVIDIA tanks to 100. But for us, it's actually a good thing, Amit, because this is only 25% of the capital that I want to allocate to this position.
Right.
So if it goes to 100, then I would want to allocate another 25%. And then if it were to go down to like 70, then I'm like, okay, let's go get the other 50% in there. And now we have a full position on NVIDIA. So what I'm trying to demonstrate to you guys is there's a strategy on the amount of capital that you want to allocate based on where the underlying is when you first get involved with it. That's why some positions look a lot bigger, a lot faster, is because they were just at better prices, so to speak, when I got in. Because at the end of the day, price matters too. Your entry point matters as well. And so just keep in mind, dude, we want to, or at least I want to allocate. So that was, how much is that total to
40 grand we put in NVIDIA. So we put in 160 today out of the 500.
Yeah. So I would like that to be about a $500,000 position all by itself.
And if NVIDIA goes to 100, the covered call premium we got also helps us, because obviously the shares don't get called away at 140. That helps reduce the cost.
Right. Yeah. So then just to take the teaching segment further, if NVIDIA tanks or it stays at like 126, which is nice. We won the cash secured put. We realized all of that money. We realized all of the covered call money. But then now we're going to have a collective adjusted cost basis. So let me pull up NVIDIA, because this is a game of math, right? So let's pull up NVIDIA here, because it's going to be on the scoreboard already. And this is all the math with NVIDIA. So we bought the shares for 40 grand, and then we've already brought in about $3,500 in premium. So we're in these things for about 36.5. Yeah. So what is our adjusted cost basis? Can you actually
121.
So that's our cost basis when you add both of these premiums?
Yep.
Dude, I like it for several reasons, because at 121 it's a lot more compelling. And two, if NVIDIA tanks, I already know, worst case in the back of my mind, as long as I'm selling covered calls above 121, I'm still mathematically okay. So I want to keep bringing in as much money as I can on the covered call side of things.
Right. So even if your brokerage says, hey, TJ, you're losing 10, 15% in your own, which is important for psychology, right? In your head, you need to know, no, I'm not, Mr. Brokerage. You're being stupid. I actually know what I'm down. And that helps you.
Well, it's being down on the ticker.
Right.
Are we down on the shares? Absolutely, dude. If it's below 132.12, make no mistake about it, you're down on the shares. The numbers, they don't lie either on the brokerage.
Right.
But we're, quote unquote, manipulating the cost basis by taking into account premiums that we've received on this said ticker.
Right.
This is just our math so that we'll know, okay, we're just treating NVIDIA like a little business called credits and debits. And we know how many credits we received and how many debits we received. That way, if things get tough and we have to make a tough decision to potentially sell a covered call below our cost basis of 132, we know how low we can go so that we stay out of harm's way if NVIDIA were to skyrocket back up and now our covered call is in trouble.
Right.
Because you don't want to be buying high and selling low. That's not a good recipe.
Yeah.
So anyway, are you guys learning anything today, Amit? I feel like you're having some aha moments here today.
This was good, dude. So I've heard about the strangle thing for a while, but I'm happy we did this example because it taught me a lot about adjusted cost basis. It taught me a lot about how to create a spread, essentially a zone in which you theoretically want the stock to be in. And it also taught me that we got to own some shares sometimes, right?
Can you address Sticky Monkey here? He's got a very, very cogent point right here. Wow, shit, did I just say cogent on TV? So check it out. No, the other one, the Bollinger Band. Yeah.
Okay, this one. Yeah.
Yeah, that's really, really ideal. It just to go through those exercises on this thing is like there's only so much time that we have to work with. But dude, your Bollinger Band, I call it the electric fence of the stock. Like, have you ever seen animals with an electric fence and they hit it and it's like, they don't want to do it because it hurts them, right? So these stocks try to stay inside this Bollinger Band. Very, very seldom do they go outside this Bollinger Band. And I like to sell cash secured puts when it's at the bottom of the Bollinger Band because I'm maximizing my premium, but there's a big level of support right there as well. And then whenever on the covered call side, when it's on the top end of the Bollinger Band, you're maximizing your premium, but you also have a nice level of resistance there because there's an electric fence on that side. There's an electric fence on this side, so to speak, and it just helps you out. So these are technical stuff. Really, really good point. Appreciate you, Sticky.
And you believe every time before you sell a cash curve put, you should always look at those bands to kind of see what the ranges look like, essentially.
Yes, correct. Unless fundamentally you're just totally sold on the company, and at the end of the day, I'm a fundamentalist. I'm not a technical person.
Yeah.
Because I think the technicals are really good at telling you when it rained. They're not necessarily that good at telling you when it's going to rain.
Right.
They're lagging indicators for the most part. So it's just one of those things, but that's just me. And again, it's NVIDIA, bro. It's NVIDIA. Like just give the audience real quickly, because you probably know these numbers. These guys are growing faster than like small companies like SOFI. You know what I'm saying? But they're billions and billions and billions of dollars. I mean, this shit is, I've never seen it in the stock market.
I've never seen it either, which is why I'm comfortable with NVIDIA as well. Let me re-explain everything. It gives me a chance to re-explain this. I'm still a bit lost on the strangle, Bruni says. So strangle is, you take a stock, what we did with NVIDIA, we bought 300 shares. We sold covered calls on that stock at 140, meaning if NVIDIA gets to 140, we have to sell our 300 shares with a $10 gain or an $8 gain because we bought at 132. But we received a premium for selling those covered calls. A covered call requires 100 shares of collateral. We sold 3 of them. And we got some premium for that. Then we sold cash secured puts, which is the second side of the strangle, at 125. If NVIDIA is above 125 by July 12th, we get to keep the premium that we got paid for selling those puts and not have to buy another 700 shares because we sold 7 of them. If it is at 124.99, we have to buy those 700 shares, or we can just end up rolling the position. Based on the premium we got from the covered call side and the cash secured put side, we got 3,500. We bought the shares for 40,000.
So Gail Thomas does a recap on our thing, but Gail Thomas needs to be the accountant.
Gail Thomas needs to be the accountant. So we spent 36.5 minus the 3,500. Basically, we have a break even at 123 and adjusted cost basis of 121, which is not bad at all.